So the second learning objective is prepare adjusting entries for prepayment. What is the prepaid expenses? When expenses are paid before they are used or consumed, an asset is recorded. So payment is before the event. That is the prepaid. Okay? Payment is before the event. Okay? So when expenses are prepaid, the asset prepaid expenses is increased, okay, to show the future service or benefit. And the cash is decreased, okay? The cash is decreased. So let's say I subscribed a magazine, okay? I subscribed a magazine. So the magazine, each month is $100. So I subscribed the annual subscription times 12 months. So the annual subscription fee is $1,200. Okay. So I made the payment on January 1st. So January 1st, I made a payment to subscribe to the magazine. Well, I used the money, I paid the money, so I credit, my cash balance decreased. So I credit cash for $1,200. So what do I debit? Well, you say, what? You should debit your expenses, right? Subscription expenses. But we're talking about January 1st. I haven't received even one magazine yet. Okay, there are 2 magazines coming over the year. Now we are talking about the January 1st, the day 1 of the fiscal year. I haven't received anything yet. Okay. So it should not be expenses, right? Because I didn't consume any service yet. So it's not expenses. But this one is an asset because it gave us a future benefit. In the future, I'm able to enjoy the knowledge, right? I learned the benefit I learned from the magazine. It's only in the future, right? So therefore, you should debit an asset account, not the expenses account. And that assets account is called a prepaid, right? Prepaid expense for 1,200. If the company's fiscal year is June 30th, okay? So this is my last day of the fiscal year. Okay, my last day of the fiscal year is June 30th. So now I consider to make adjusting entry. Okay, how many months has passed since January 1st? So we are talking about June 30th, right? So this is the year end. I need to make adjusting entry. So how many months has passed since January 1st? I needed somebody to interact with me, so I can it's easier, right? So how many months it has passed since January 1st? Nobody? 6 months. Yes, sorry. Okay, so because you are sending me the direct message, I was not able to see. So 6 months, right? Okay, so how many magazines have you received? How many issues, right? How many issues of magazines you have received? So for a year, for one, there are monthly, right? There are 12 magazines for a year. How many you have received? Six months has passed. Six, right? Six magazines you have received. And you have learned the knowledge. You have consumed the benefit of that six magazines, right? So you should recognize the expenses. Okay. So you should debit some expenses. Okay. So what do you debit? You should debit because you use the magazine, the subscription, right? And you already consumed 6 out of 12, right? So you should debit subscription expenses, right? Once you consumed this, you have to recognize as expenses. The debit expenses for how much? How much here? Debit subscription expenses for how much? 600. Thank you. So then what do you credit? What do you credit? So remember, your asset, when you recognize expenses, either your asset will decrease or your liability will increase. So here, do you think you're going to increase your liability? Or you think you're going to consume your asset? If you consume your asset, which asset has been consumed? Yeah, very good. Prepaid expenses. This asset now have less benefit, right? We say why we recognize prepaid expenses as a current asset because it's gonna generate future benefits of the 12 magazines, right? But now on June 30th, there are only 6 magazines left. On January 1st, you have 12 magazines to come. But on June 30th, you only have 6 magazines to come. So therefore, the benefit is less. It's only half, right? So the benefit is only half. Your asset value should be only the half, right? So your asset value was 1,200, and now it's half, so it's 600 reduced. Okay. And now you see, what is this called? This is my adjusting entry. This is my adjusting entry because I didn't record subscription expenses every month, but that expenses should be recognized with the passage of time, right? Does this make sense? If it makes sense, give me a sum up. 1, 2, 3. If it makes sense, give me a sum up. 1, 2, 3. Okay, there's 3 students. 1, 2, 3. What about the other students? What about the other students? Oh, 4. I have a 4th student. 5, 6. Yeah. Oh, 7, 8. Good, good. Okay, good job. Okay, so you can see that the timing difference between the cash payment and the event, okay, can cause some of these accounting entry issues, right? So this is an example that you have a prepayment. So the cash payment, cash flow is before the event, right? So you debit prepaid expenses, okay, credit cash. And then on the fiscal year end, you need to recognize the amount of expenses and then credit correspondingly the decrease in the prepaid asset. Okay. So accounting adjusting entry increases, so we use debit and expenses account. So in our example, we debit the subscription expenses and decrease, which is credit, the asset prepaid account. So I credit prepaid expenses account. Okay, so this example shows you how those journal entries will be done. Deferred revenue. This is the other side of the same story. Okay, so here, this company is paying a money to another company, but they haven't received the service. So for this company, it's a prepaid. What about to the other company, right? The other company needed to also, they needed to also record entries, right? So company A is making a payment to company B for that the service hasn't been delivered. So B will deliver service to A, right? But A paid ahead of time. So from the perspective A will record prepaid expenses. What about B? What about this B company? They received the cash. They haven't done the delivery yet, right? So if they receive the cash, you debit the cash of 1,200, right? So that magazine company, they receive the cash 1,200. So they need to credit something, right? They need to credit something. What should they credit? Yes, that's right. Yeah, students has already responded to me. They credit what? A liability, right? A liability. Okay, they debit cash, but they haven't earned. They cannot credit revenue. They cannot credit revenue because they haven't earned it yet. They haven't sent any of the 12 magazine to the company yet, right? So at this point, it's not a revenue, it's a liability. So that means it's a future sacrifice of resources, right? In the future, they have to print these magazines. They have to use people to ship it to the buyer. So that's a future sacrifice of economic resources. So that's a liability. So what is that liability? The liability is called deferred revenue, right? I explained this before. So deferred revenue, okay, for 1,200. Okay, so this is January 1st. Okay, and then let's say this company might have a different fiscal year end, right? Let's say it's the same year end. Also, June 30th is also the magazine company's year end. Okay, so what should the journal entry we should do? Well, 6 months has passed. The magazine company is able to send 6 magazines to the buyer. Okay, so that means they have completed half of their performance obligation, right? The performance obligation is to send the 12 magazines, right? Deliver the 12 magazines to the buyer, right? This is a merchandising company, right? You are providing the magazine, right? So you delivered half of it, right? Over the 6 months. So what should you do? What should you credit? So if you already fulfilled the performance obligation, should you recognize your revenue? You gave them 6 magazines already. You deliver it, they receive it. Should you recognize the revenue? Yes, you should recognize the revenue. For 6 magazines, half of it, which is 600. And then you need to debit something, right? debit something. So you recognize the revenue, you debit something, you debit cash. No, they already give you the cash, the 1,200 on January 1st. You already debit the cash 1,200 on January 1st. So they cannot debit your asset. So it's not your asset increase. So it's your decrease in liability. Okay? So you debit what? You debit a liability, which is deferred revenue, right? So on January 1st, you have a liability of 1,200 because you haven't done any work yet. But since 6 months passed, you completed half of the work. So now your liability level is only half of the level of previous balance, 600. Okay. So in this adjusting entry, this entry will decrease the liability by debit deferred revenue and increase revenue account to record revenue earned. Okay, does this make sense? 1, 2, 3. Does this make sense? 1, 2, 3, 4, 5. So only 5 think this makes sense. 6. Okay, does anyone have any question? Okay, 7, 8, 9. Does anyone have any question? Okay. Yeah, that's my prepaid expenses and the deferred revenue.